Good afternoon. All of you are ready for this wonderful chapter cash flow statement. So please come to question number 15. Please come to question number 15. Please come to question number 15. Problem number 15 says Astha Limited gives you the following information. You are required to prepare cash flow statement by using indirect method. Underline cash flow statement by indirect method. Since they have mentioned indirect method, can we do anything? Can we do anything about it? No. So this is a question where the institute has mentioned that it is an indirect method. As per AS3, for the year ended 31st March 2014, balance sheet as on 31st March 2013, balance sheet as on 2014. This is previous year and this is current year. This is previous year and this is current year. Come to the next line. Asset side, first liability side, capital is having no change. Retained earning has some change. Retained earning means P&L account only. Retained earning means P&L account. Then we have debenture. Debenture was 0. Now debenture is 9 lakh. Debenture has become 9 lakh. Current liabilities creditor will go in working capital changes. Bank loan. Bank loan from 150 it has become 3 lakh. From 150 it has become 3 lakh. Liability for expenses. This is current liability item. Current liabilities. Dividend payable. Dividend payable, there is an adjustment. Dividend payable, there is an adjustment. Dividend payable, there is an adjustment. And I will prepare a working note for that. Will prepare a working note for that. This is liability side. Look at the asset side. Look at the plant and machinery. Look at the plant and machinery. There is some purchase and this is the depreciation accumulated. Accumulated depreciation difference will indicate difference is current year depreciation. Difference will indicate current year depreciation. Current asset debtor and one new item has come, provision for bad debt. This is new. This is something new. We will discuss it when we will come to debtors. Next item is cash and marketable security. Marketable security. Treat it as cash equivalent. Write a note later at the end of the answer that marketable securities are treated as cash equivalent. So while writing cash and cash equivalent, you add these 2 points. Cash plus marketable security together will be cash equivalent. Then inventory and prepaid expense will come in change in current assets. Inventory and prepaid expense change in current asset. Any query on this question till now? Anybody, any query on this question? Now see the additional information. This is an exam question. So write down, very important. In one of the past exams, this question was asked. Additional information is net profit for the year. Net profit for the year ended 31st March 2014 after charging depreciation, underline, after charging depreciation of 1,80,000 is 22,40,000. So this 22 lakh 40,000 is profit for the year, and depreciation I will add back. Depreciation I will add back. Okay. And you see, I will go to the balance sheet again on the asset side. See this difference of depreciation. This is also exactly 1,80,000. The depreciation, if you see, 6,10,000 and 7,90,000. This is exactly 1,80,000. So no major adjustment has happened in fixed asset because depreciation figure is matching. It seems there is no purchase and sale of asset. Purchase of asset is there, sorry, purchase of asset is there. There is no sale. Debtor of rupees 2,30,000 were determined to be worthless and were written off against the provision for doubtful debt account during the year. So this is a new adjustment for you. Write down new adjustment. New adjustment is, there is a debtor of rupees 2,30,000 who has become bad. So write down two journal entries that you pass for this. What are the journal entries do we pass for this? The journal entry we pass for this is bad debt account debit. Student will write the entry quickly in your rough notebook or notebook. Bad debt account debit to debtors account, 2,30,000, first entry. And second entry will be, because they have made provision for bad debt, because they have created provision for bad debt. What was the purpose of provision for bad debt? That if any bad debt takes place, then if any bad debts takes place, then the provision for bad debt is used for writing of bad debt. So the entry will be, second entry, provision for bad debt account debit to bad debt account. Provision for bad debt account debit to bad debts account. So these two entries the company has passed. Okay. So we will have to prepare one provision for bad debt account to see how much provision for bad debt was transferred to P&L account in the current year, because there is an actual bad debt which has happened, and the problem clearly mentions here these bad debts were written off against the provision for doubtful debt account. So it was not directly transferred to P&L account, it was transferred to provision for bad debt account. I hope in your 11th 12th standard or in your CA foundation or CPT, whatever you have done, they must have taught you the entry related to provision for bad debt. Actual bad debt entry is bad debt to debtor, and then the bad debt is not transferred to P&L account, rather bad debt is adjusted in provision for bad debt. Point number 3, Astha Limited declared dividend of 12 lakh. Only declared entry for dividend declared. I want to ask you, entry for dividend declared. Entry for dividend declared. The entry will be P&L account debit to dividend payable. To dividend payable account. P&L account debit to dividend payable account. Entry for dividend payable, P&L account debit to dividend payable account, and that is why in your balance sheet last item liability side dividend payable is appearing. Last item dividend payable is appearing. Next point, what is the next point? You have to prepare cash flow statement. This is an exam question. Okay, so let us draw the format first. Trust me, this is an important question for your exam. Similar questions have been asked. So write down the format. This question specifically mentions that you need to prepare cash flow statement under indirect method. So I request all of you to kindly draw the format first. Please draw the format first. First write down the name of the company, Astha Limited, cash flow statement, Astha Limited cash flow statement. For the year ended, write down 31st March 2014. For the year ended 31st March 2014. For the year ended 31st March 2014. Then write down point number A. Point number A. Point number A, write down cash flow from operating activities. Cash flow from operating activities. Under that write down net profit before adjustment. Net profit before adjustment. Net profit before adjustment. Then write down point number 2, adjustments. Point number 2, adjustments. Point number 2, adjustment. Keep about 8 lines blank. Keep 8 lines blank. Point number 3, operating profit. Operating profit before working capital changes. Operating profit before working capital changes. Operating profit before working capital changes. One line blank. One line blank. Working capital changes. Working capital changes. Write down 6 line. Point number 5, write down cash generated from operations. Cash generated from operations. Cash generated from operations. Then write down income tax paid. Income tax paid. Last line write down. Last line write down net cash flow from operating activities. Net cash flow from operating activities. After that, point number B, cash flow from investing activities. Cash flow from investing activities. Cash flow from investing activities, 2 lines blank. Cash flow from investing activities, 2 lines blank. Point number C, cash flow from financing activities, 5 lines blank. Cash flow from financing activities, 5 lines blank. Point number D, write down net increase or decrease in. Net increase or decrease in cash and cash equivalent. Net increase or decrease in cash and cash equivalent. One line blank. Point E, cash and cash equivalent at the beginning of the year. Cash and cash equivalent at the beginning of the year. Cash and cash equivalent at the beginning of the year. Cash and cash equivalent at the end of the year. Cash and cash equivalent at the end of the year. Cash and cash equivalent at the end of the year. I hope the format is ready. Can we go to working notes number now? Yes, one student is saying format is ready. So write down working note 1. Working note 1. Please write down working note 1 is retained earning account. Retained earning in bracket write P&L account. What is retained earning? Profit which is not distributed. Keep 6 lines blank. Working note 2, write down dividend payable account. Dividend payable account, 6 lines blank. Through account it is easy to understand. And then working note 3, write down working note 3, one account we will draw provision for doubtful debts account. Provision for doubtful debts account, 6 lines. These are the 3 accounts. Working note 4, write down journal entry for bad debts. Journal entry for bad debts. This is for understanding. This is for understanding. In the exam, it is not required. So, what are the entries I had passed? First entry was bad debts account debit. Bad debts was how much? 2,30,000. To debtors account, 2,30,000. And second entry we had passed provision for bad debts account debit 2,30,000 to bad debts account 2,30,000. I will require it later. And working note 5, write down change in debtors, because this time the debtor account has an adjustment. Debtor account has an adjustment. So therefore, I need to do adjustment of this bad debt while calculating the change I can't directly take the difference. I cannot directly take the difference. I will have to make some adjustment in opening debtor figure, then calculate the change. Out of opening debtors, 2,30,000 was bad. So I have to make adjustment for that. Otherwise, your cash flow statement will not tally. Okay. So these are the 5 working notes. Okay. These are the 5 working notes. So are you ready to solve? Come on. Are you ready to solve? Yes. Student is saying we are ready to solve. So here I begin. First line, capital no change. Capital no change. Retained earning working note 1. Working note 1. Buy balance brought down 26,50,000 and 2 balance carried down 2 balance carried down 2 balance carried down is 36,90,000. 36,90,000. We'll come back to this. Then we have debentures. Opening balance is 0. Closing balance is 9 lakh. Opening 0, closing 9 lakh. Which activity? Reply. Debenture issued will come in which activity? Operating, investing or financing? Come on, reply. So you will say it will come in financing activity. Issue of debenture. Issue of debentures. Positive number 9 lakh because it is cash inflow. Right. Next line, current liabilities. Creditors. Under current liabilities, creditor will come in operating activities. Point number 4, working capital changes. 8,80,000 minus 8,20,000. So there is a decrease in creditor. Decrease in creditor is a decrease in cash flow. Come on, Chetan. Decrease in creditor is a decrease in cash flow or increase in cash flow? Reply fast. Decrease in creditor is a decrease in cash flow. So you will write in bracket 60,000. 60,000. Then next line, bank loan. Bank loan was taken during the year. Opening is 1 lakh 50. Opening is 1 lakh 50 and closing is 3 lakh. Closing is 3 lakh. So can I say financing activity? Can I say financing activity additional bank loan raised? Additional bank loan raised is 1,50,000. Is 1,50,000. Positive number. Next line, liability for expenses. Operating activity point 4. Working capital changes. Opening liability 330, closing 270. Again write. Decrease in liability for expenses 60,000. Decrease in liability for expenses 60,000. In bracket, decrease in current liability, decrease in cash flow. Next line, next line is dividend payable. There is a working note. Number 2, buy balance brought down By balance brought down is 1,50,000 and to balance carried down is 3 lakh. You have to just follow what they have done. Later on, missing figure would be actual payment. Difference is not payment because there is some dividend declared also. Now we'll come to asset side. Plant and machinery. Opening balance 27 lakh 30,000, closing balance 40 lakh 70,000. So what has happened? There is a purchase. In investing activity, write down. Investing activity, write down. Purchase of plant and machinery. Purchase of plant and machinery. Tell me the difference. How much is that? Is it 13 lakh 40,000? In bracket, write down 13 lakh 40,000. And then the difference in depreciation is current year depreciation. That we will write in adjustment. So add depreciation, adjustment, operating activity, point number 2. Operating activity, point number 2, depreciation amount is 1,80,000. It is given in the question also. Next point, current asset, debtors. Debtors come to this working note number 3 and 5. So what I'll do, first I'll complete working note 3, provision for bad debt. Provision for bad debt, please come to working note 3. By balance brought down 1,50,000 and to balance carried down, you will see 1,90,000. By balance brought down 150, to balance carried down 190. Now come to working note 4. In working note 4, on the screen right side, you have passed one entry, provision for bad debts account debit to bad debts 2,30,000. So come to provision for bad debt account debit side, to bad debts 2,30,000. To bad debts 2,30,000. And now it is not telling. Now it is not telling. What is the difference? On the credit side, by balancing figure, tell me the amount. First you take debit side total 4,20,000 minus 1,50,000. So this is 2,70,000. The student will have to tell me by which account, by dash dash, which account you will transfer it to. Which account you will transfer this to? Please reply. In provision for doubtful debt, if the balancing figure is on the credit side, what will you call it? You will call it by profit and loss account. 2,70,000 by P&L account. It can't be by bank. It is provision for doubtful debt. So this is a non-cash item which is debited to P&L account. So what I will do, in operating activity, we will add back. We will add back provision for bad debts. Working note number 3, amount is 2,70,000. Amount is 2,70,000. Venu Gopal is right. Jain is right. Tanya is right. Bansode is right. Okay. And what about debtors? Working note 5, debtors. Right hand side rupees. First point A, opening balance. Opening balance of debtor was 23 lakh 90,000. So you see the first entry here on the screen. You have written off debtors by 2 lakh 30,000 less bad debts written off, because debtor will also reduce 2 lakh 30,000. So you draw one line and take the balance right now, 23 lakh 90,000 minus 2 lakh 30,000 is 21 lakh 60,000. Point C, closing balance. Closing balance of debtor in the question is 28 lakh 30,000. 28 lakh 30,000, and therefore point number D, increase. Increase in debtors. Increase in debtor is equal to 6 lakh 70,000. Increase in debtor is 6 lakh 70,000. Increase in debtor 6 lakh 70,000. This I will write in working capital changes. This I will write in working capital changes. So we'll come to operating activity. Working capital changes, point 4. Is that decrease or increase? Let me just check. Increase. Increase in debtor. So write down increase in debtor. Increase in debtor. Student will guide me. Increase in debtor, decrease in cash flow or increase in cash flow? Working note 5. Increase in debtor is decrease in cash flow. Increase in current asset, decrease in cash flow. So this completes my debtors and provision for bad debt related adjustment. That was something new for you. Next new thing is, in the question cash and below that marketable securities is given. So what we can do, we can assume that marketable securities are cash equivalent. They are short term highly liquid investment which can be converted into known amount of cash without any significant risk of change in value. So therefore, marketable security also you will add in cash. So please come to point number E. Cash flow statement, point number E, you will write in bracket 15 lakh 20,000 cash, and below that marketable security 11 lakh 80,000. So that is equal to 27 lakh in the outer column. That is 27 lakh in the outer column, and similarly cash and cash equivalent at the end, cash plus marketable security, that is equal to 33 lakh 20,000. 33 lakh 20,000. Chaurasia is right. Suman is right. Okay, so this completes my balance sheet up to marketable securities. Any query? Now we'll come to operating activity, point number 4 again. There is inventory. So write down inventory in point number 4, working capital changes. Decrease in inventory. Decrease in inventory, because opening inventory 20 lakh 10,000 minus 19 lakh 20,000. Decrease in inventory is increase in cash flow, positive 90,000. Everybody, is it right? One more item is there. Increase in prepaid expense. So please reply, what is increase in prepaid expense? Increase in prepaid expense is decrease in cash flow or increase in cash flow? Increase in prepaid expense by 30,000 rupees is a decrease in cash flow. Is a decrease in cash flow. Balance sheet items are over. Any query on balance sheet items? No query. What is your first adjustment? Net profit for the current year after charging depreciation is 22 lakh 40,000. 22 lakh 40,000. So this I will write in cash flow statement point number 1. Net profit before adjustment. Current year profit we have to write, which is directly given 22 lakh 40,000. And second effect will be, because now we are doing adjustment, so second effect will be in retained earning account. Second effect will be retained earning account. It is the same thing. Working note 1 credit side by net profit for the year. By net profit for the year. How much was that? 22 lakh 40,000. It is after depreciation. So no further effect required. So this is my first adjustment. Second adjustment is debtors of rupees 2,30,000 were determined to be worthless and were written off against the provision for doubtful debt. This we have done. Working note 3, 4, 5. These 3 working notes were dedicated for this adjustment number 2 in your question. Last point, Astha Limited declared dividend of rupees 12 lakh. So you write down one working note 6, entry for dividend declared. Entry for dividend declared. So the entry will be in this question, retained earning account debit, retained earning account debit 12 lakh to dividend payable 12 lakh. This is the entry this company has passed. Effect of that entry has gone in the balance sheet. So now let us transfer it to the 2 working note number 1 and 2. Working note 1 on the debit side, working note 1 retained earning account debit side to dividend payable account 12 lakh, and dividend payable account credit side by retained earning account 12 lakh, by retained earning account 12 lakh. Now let us check retained earning account, is it tallying? The total of the retained earning account is 48 lakh 90,000 and 48 lakh 90,000. So this account is already tallying. Dividend payable account, check whether it is tallying. Credit side total is 13 lakh 50,000. Credit side. Debit side, there is some missing figure. 1350 minus 3. 10 lakh 50,000 balancing figure. 10 lakh 50,000 balancing figure here. And you have to tell me to what? What should I write here in working note to debit side? Please reply. Your intelligence will be tested now. What should I write here? 2 options I will give you. Bank account, option 2 will be P&L account. So should I write bank account or should I write profit and loss account? Please reply. Bank account or P&L account? Dividend on the debit side is having some difference. Where will that difference be transferred to? That difference will be transferred to bank account, balancing figure. Bank account is right, which means dividend is paid. Dividend is paid. So where will dividend paid be shown? Next question. Where will you present dividend payable? Paid, dividend paid. Under which heading you will show dividend paid? Surya is right. Dividend paid will come under financing activity. Financing activity, dividend paid, working note 2, the amount is 10,50,000. Financing activity is right. Thanga Lakshmi is right. Now we have done all adjustment and all our working notes are also tallying. So therefore we can close our answer now. So dear student, first you write here point number 3, operating profit before working capital changes. Add these 3 items. So that is 26 lakh 90,000. 26 lakh 90,000. Chetan is right. And then you add all these items and write in point number 5, cash generated from operations. Cash generated from operation. Do all plus minus and tell me what is cash generated from operation. 19 lakh 60,000. 19 lakh 60,000. And then income tax paid is 0. In this question, income tax paid is 0. So cash flow from operating activity will be 19 lakh 60,000. Very good. Very good. Those who are answering. Others are sleeping. They must have had a heavy lunch. Kheer, pakwan, aloo paratha, dahi, and now they are sleeping and not replying. Now come to investment activity. 13 lakh 40,000. Come to financing activity, seems to be 0. Therefore, point number D, net increase or decrease in cash and cash equivalent. Net increase or decrease in cash and cash equivalent. Check the answer. It should be 6 lakh 20,000. Then only it will tally. Are you getting 6 lakh 20,000? Yes, Surya, are you getting 6 lakh 20,000? Tanya, are you getting 6 lakh 20,000? Yes. Is the answer telling here? Is the total automatically telling here? Yes. Everybody should check. So this answer is over. I will have to give you one note. Note, write down. Note number 1. Marketable securities are assumed to be cash equivalent. are assumed to be cash equivalent. Are assumed to be cash equivalent, hence not shown in hence not shown in investment activities. Hence not shown in investment activity. Second note, write down profit figures. Profit figure in bracket rupees 22 lakh 40,000 given in the problem is before providing for dividend payable. Is before providing for dividend payable. Hence, dividend declared is not adjusted in adjustments. Hence, dividend payable or dividend declared is not adjusted in adjustments. Is not adjusted in adjustment. Why I have dictated this note? Some of the students were planning to ask this question, that why dividend declared is not added in adjustments in operating activity. The answer for that question is this profit figure is before providing for dividend. Since dividend is not deducted in arriving at 22 lakh 40,000, it won't be added back. It won't be added back. Okay. Any further query is welcome. After these two notes, any query is welcome. No query, no question. Question number 30, no problem. Now we'll come to question number 13. Question number 13, please come to question number 13, all of you. Another important question. Another important question is question number 13. All of you reach question number 13. AS Foundation Limited Company's comparative balance sheet for the year 2014 and company's income statement for the year given below. First, you write down, this is an important question. It was asked in one of the past exams. And the company's income statement. So, this time in this question, you are given a balance sheet and you are given income statement also. Income statement means P&L account is also given. So, this is the first question where you have P&L account also. Balance sheet, comparative balance sheet 31st December 14 and 13. Now, in this question, this column 14 is current year and this 13 is last year. So be careful. You have to read from left to right to understand the change. Sorry, right to left. Right to left you have to read to understand the change. So what is the first item? Share capital. Share capital is same. No change. Retained earning is there. We'll prepare a working note for this if required. Bonds payable. Opening is 40. Closing is 135. So new bonds issued. New bonds issued because closing is more than the opening. Fixed asset. Opening, closing. Accumulated depreciation. So this also you tick mark. There seems to be some adjustment in this. Current asset, then in current asset, inventory, debtor, prepaid expense, cash. The first three item will go to working capital changes. Cash will go to cash and cash equivalent at the beginning, at the end. Less current liabilities and provision. Accounts payable, accrued liability. These two items will go to working capital changes. Income tax provision. So this is an income tax provision. We will see what we have to do with this. Any query on the balance sheet? If you don't have a query on balance sheet, come to income statement for year ended 31st March 14, figures in crores of rupees. Sale, cost of goods sold, gross profit, operating expense, net operating income, non-operating item. Tick mark, loss on sale of equipment. This is a non-cash item. And you also tick mark in balance sheet, plant and machinery and accumulated depreciation. There is some adjustment in that. Then income before tax, less income tax. So this is the provision for income tax. This is the provision for income tax made during the year, made in current year, CY current year. Tick mark this last item, income tax provision. Tick mark income tax provision. Okay. And then this is net income. This is current year's profit after tax. And this is current year profit before tax. So when you will prepare cash flow statement, listen to me, if you start with net income after tax, then add back provision for taxation. If you are starting with net income before tax, then don't add back provision for taxation. So depending upon from where you start, you have to decide whether to add income tax provision or not. So one more time, if you are starting with 66, add back provision for tax. If you are starting with 114 in cash flow statement, do not add this income tax provision. Additional information. Dividend of rupees 48 crore were paid in 2014. Dividend of rupees 48 crore was paid in 2014. Now look at your question. Can you see any dividend mentioned above? Can you see dividend in the balance sheet? No. Can you see dividend in P&L account? No. So what entry they have passed? They have passed two entries. Retained earning account debit 48, like previous question, to dividend payable 48, and second entry, dividend payable debit 48 to bank 48. It means it has been paid. Because it is paid, it is not appearing in the balance sheet. So dividend paid will come in financing activity. This you will write in financing activity. And if you are preparing a working note retained earning account, then on the debit side of retained earning, you will write dividend payable. Next point, number 2, in your book, point number B, the loss on sale of equipment of 4 crore. Which loss of equipment they are talking about? This one on the screen, this loss on sale of equipment of 4 crore. There is a note on this. So write note number B. There is a note number B on that. Reflects transaction in which equipment with a original cost of 12 crore and accumulated depreciation of 5 crore. Original cost 12 crore. Accumulated depreciation 5 crore, which means WDV was 7 crore. WDV was 7 crore. Sold for rupees 3 crore in cash. Sold for 3 crore. So the loss is correctly calculated 4 crore. The loss is correctly calculated at 4 crore. So this adjustment we know how to do it. In past 3 or 4 questions, we have done adjustment for loss on sale of fixed asset required using indirect method. Underline, using indirect method. Determine the net cash flow from operating activity and construct a statement of cash flow. Means you have to prepare cash flow statement also. Full cash flow statement I have to prepare. So this is indirect method. In this question, data is sufficient to follow direct method also, because sale is given, cost of goods sold is given. From sale and cost of goods sold, you can find collection, purchase, etc. But because the question has spoken about indirect method, we will also follow indirect method only. We will also follow indirect method only. Is it right? Is it right? Yes. So, dear students, you are solving a very important question where balance sheet and P&L account both are given, but the question wants you to follow indirect method. So, start. Name of the company: AS Foundation Limited. Name of the company: AS Foundation Limited. Cash flow statement, indirect method for the year ended, 31st December 2014. For the year ended 31st December 2014. For the year ended 31st December 2014. Okay, this is the format on the screen. Please draw this format. First point A, cash flow from operating activities. Point number A, cash flow from operating activities. Under that we have point number 1, net profit before adjustments. Net profit before adjustments. One line blank. Point number 2, adjustments. Point number 2, adjustments. Under adjustments, keep around 6 lines blank. Keep 6 lines blank. Then write down point number 3, operating profit before working capital changes. Operating profit before working capital changes. One line blank. Point 4, working capital changes. Point 4, working capital changes. Keep 7 lines blank here. There are many items. keep 7 lines blank. Point number 5, cash generated from operations. Cash generated from operations. 1 line blank. Point 6, income tax paid. Income tax paid. Income tax paid. And after that, write down net cash flow from operating activities. 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 Then write down point number B. Point number B, write down cash flow from investing activities. Cash flow from investing activities. Cash flow from investing activity, keep 5 lines blank. Cash flow from financing activity, keep 5 lines blank. Approximately you have to keep blank. Okay. Point number D, write down. Point number D, net increase or decrease in cash and cash equivalent. Net increase or decrease in cash and cash equivalent. Point number E, cash and cash equivalent at the beginning. Cash and cash equivalent at the end of the period. Cash and cash equivalent at the end of the period. Is the format ready, everybody? If the format is ready, please inform me. If the format is ready, inform me. Yes, we have done. Come on. Is the format ready? Okay. So we'll prepare some working notes. We'll prepare some working notes to help us to solve this question. Write down working notes. First working note, write down plant and equipment account. Plant and equipment account. In bracket, write down net figure, net of depreciation. Net of depreciation. In bracket, net of depreciation, 6 lines or 7 lines. Working note 2, write down retained earnings account, retained earning account, and working note 3 write down, income tax provision account, income tax provision account 6 lines. In all the formats you write down rupees in crore. In all the formats you will write rupees in crore. I think this will serve the purpose. There are no major adjustment. Okay, there are no major adjustment. This will help us to solve the problem. Any query now? Anybody, any query on this question? Anyone, any query till now? If not, let us start this wonderful question number 12. Sorry, 13. Question number 13, we are starting. Everybody will keep the book in front of you. And today's homework, what is today's homework? Guess. Today's homework, guess and write yourself. What is today's homework? Share capital, there is no change. 140, 140. Retained earning account has a change. By balance brought down. What is that by balance brought down? Opening balance is 92. Yes, please guess the homework. Closing balance, guess the homework. 2 balance carried down, 110. Is this right? Have I written correctly or I have made some mistake? Is it right or is it wrong? So the answer is this is right. Next item is bonds payable. What is bonds payable? Opening is 40 and closing is 135. Oh, so that means we'll go to financing activity and write issue of bonds. 135 minus 40, 95. 135 minus 40, 95. This is my sources of fund. Application of fund, fixed asset. There is a working note 1. Fixed asset opening balance. Net. 2 balance brought down. Opening balance is 115. Net of depreciation. In bracket, net of depreciation, and closing balance is by balance carried down, 430 minus 218, 212. This is also net of depreciation. Our objective is to find out any missing figure. Main question is cash flow statement, that should be right. Then there is an investment item also. Opening was 75, closing is 60. Opening is 75, closing is 60 investment. But let us look at the P&L account. What do you think this is? Opening investment is 75, closing investment is 16. There is a 15 difference. What will you call it? What will you call it? Option 1, sale. Option B, write off. Option A, sale. Option B, write off. The difference of 15, what will you call it? Please reply. What will you reply? Of write off is not possible. Why write off is not possible? Write off is not possible because if investment was written off, it would have come in the P&L account. But write off of investment is not appearing in the P&L account. So the next possibility is sale. The next possibility is sale. At what amount it was sold? It was sold for 15. What about profit or loss? No profit or no loss. Why no profit or no loss? The reason being, if there was any profit or loss on sale of investment, it would have appeared in P&L account, but it is not appearing in P&L account. It means the investment were sold at book value only. No profit, no loss. So I will write this difference 15 in investment activity as sale of investment. Sale of investment. It is not written off and it is not sold at a profit or a loss. Write in bracket 75 minus 60. 15 is your cash flow. 15 is your cash flow. Come on, next. Next item is current asset. In current asset, we have inventory, accounts payable, prepaid expense. Inventory, accounts receivable, prepaid expense, we will write in operating activity. Point number 4, working capital changes. So start with inventory. Increase in inventory. Please tell me how much is increase in inventory? 205 minus 160. Increase in inventory, decrease in cash flow. Increase in inventory is decrease in cash flow. Accounts receivable has decreased from 270, it has become 180. So I will write here decrease in accounts receivable. 270 minus 180, 90. Decrease in accounts receivable. Decrease in accounts receivable is an increase in cash flow. Is an increase in cash flow. Next is prepaid expense. Prepaid expense has also decreased. From 20 it has become 17. Decrease in prepaid expense. 20 minus 17. Decrease in current asset, increase in cash flow. Cash account. Point number E. Cash at the beginning. Beginning cash. Outer column 10. Closing cash. Outer column 26. 10 and 26. Dear student, come to accounts payable. Current asset item. Accounts payable is a current liability, current asset item. So this is current liability. Working capital changes. Point number 4. 310 has become 230. So I will call it decrease. Decrease in accounts payable. Decrease in accounts payable 310 minus 230. Decrease in current liability is decrease in cash flow. Decrease in current liability is a decrease in cash flow. And let us look at the accrued liability. From 60 it has become 70. So I will write here increase in accrued liabilities. Increase in current liability is an increase in cash flow. Increase in current liability is increase in cash flow. And the last item is income tax provision. Sorry. There is a working note number 3. Working note number 3. Priyanka, welcome to this class after many days. Buy balance brought down. Buy balance brought down is 8 and 2 balance carried down is 15. 2 balance carried down is 15. So this is my balance sheet. This is my balance sheet. Any query? Any query on balance sheet? Please ask me now. Now this is the question where P&L account is also given on the screen. P&L account is also given, but I don't require all the figures of P&L account. I will only require those figures which are useful in solving. Net income is required. Provision for taxation is required. Loss on sale of equipment will be required. So these 3 figures I will require from P&L account. But what about sales, cost of goods sold, operating expense? Sales, cost of goods sold, operating expense will not be required. Then you will ask, why not required? Why not required? Because I am taking profit figure. If I am taking 66 in my cash flow statement, which indirectly means I have taken all these figures, and only those figures which have to be adjusted will be adjusted. So when I am writing profit 66, it means it includes all the above items. But those items which require adjustments will be adjusted by giving double effect. Is it right? So I don't require 3 figures in the answer: sales, cost of goods sold, and operating expense. So we'll start with net profit. Net profit. Start from last item, net profit. Net profit you will write in cash flow from operating activity. Net profit before adjustment 66. Net profit before adjustment 66. And the second effect of that will be in working note 2, retained earning account. Current year net profit by net profit 66. By net profit 66. Any query till now? Then the next item in the P&L account is provision for taxation. I will add back in adjustment. Add provision for taxation. This is provision for taxation because it is in P&L account 48. Then we'll go to working note 3, credit side, by P&L account 48. By P&L account 48. Contra effect. The entry is P&L account debit to income tax provision account. And now this provision for taxation account is not telling. So the difference represent actual tax paid. Take credit side total 56 minus 15, so 41. 41 is the balancing figure. 41 is the balancing figure in income tax provision account. So where will you write 41? You will write in operating activity last second line, income tax paid. Working note 3, amount in bracket 41. Amount in bracket 41. This is about income tax provision. And there is one more line, loss on sale of equipment. Add back. Add back loss on sale of equipment. Add back loss on sale of equipment 4. Add back loss on sale of equipment 4 in adjustment. Any query? And then we'll go to fixed asset account, credit side, by loss on sale of equipment. By loss on sale of equipment 4, contra effect. Contra effect. Other items I don't require. Sale, cost of goods sold, operating expenses we don't require because we have already written the profit figure and only 3 adjustments were required that we have done. So you have not yet answered what is today's homework. So I am going to tell you now today's homework. Today's homework will be all questions that we have covered. You will revise. Plus you will try 10 more questions from your study material. Plus you will try 10 more questions from your study material. Okay? So that is the homework for today. Now come to additional information. What is additional information? Dividend of rupees 48 crore were paid in 2014. So I will write down in financing activity, dividend paid 48. Dividend paid 48, and in retained earning account debit side, to dividend payable 48. To dividend payable 48. Now you will find your retained account is telling, retained earning account is telling, I am finding that my retained earning account has also tallied on its own. So tick mark. This account has also tallied. Last adjustment in your book. The loss on sale of equipment of rupees 4 crore reflects a transaction in which equipment with an original cost of rupees 12 crore and accumulated depreciation of 5 crore was sold for rupees 3 crore in cash. So write down buy bank, sale value 3 crore. Buy bank, sale value 3 crore. If 3 crore is already given. If it was not given, we could have calculated. If it was not given, then we could have calculated it. How we would have calculated this 3 crore? Suppose the institute would not have given figure of 3 crore, how will you calculate? WDV of the asset sold is 12 minus 5, 7 crore, less loss 4 crore, so sale value 3 crore. But your institute is very, very kind. They have given 3 crore figure. Where will you transfer this 3 crore figure? Where will you transfer the 3 crore figure? Investing or financing? So you will say we will transfer to investing activity. Sale of plant and equipment. Sale of plant and equipment 3. Sale of plant and equipment 3. This is given in the problem. Come back to that plant and equipment account. Now check if it is tallying or not. If it is not tallying, something is missing on the debit side, then that will reflect purchase. Before that, depreciation also we need to calculate. We need to calculate the depreciation figure also. Just wait a minute. What is the current year depreciation? What is the current year depreciation? So write down one working note for current year depreciation. Current year depreciation is a missing figure. Current year depreciation. Anybody today show your skill. Please reply. Why current year? Why income tax given in P&L account is provision for tax and not actual tax? It's very easy because for income tax provision, the entry we pass is P&L account debit to provision for income tax. This is one query from a student, that why income tax provision in P&L account is not actual paid, because the entry is P&L account debit 48, so provision for income tax 48. So I will go to income tax provision account. But if you look at the income tax provision account, the opening and closing balances are not same, which means what is provided in P&L account is not equal to what is paid, and therefore the balancing figure is the payment made. Okay, so dear student, please answer my question. What is the current year depreciation? There is some current year depreciation. Anybody, what is current year depreciation? Nobody wants to reply. Current year depreciation, write down working note number 4, right hand side rupees in crores. How to find current year depreciation? First A, write down opening accumulated depreciation. Opening accumulated depreciation. Opening accumulated depreciation will appear in opening balance sheet, asset side 194 you will find. 194. Point number B, less accumulated depreciation on asset sold. In case if you have sold some asset, accumulated depreciation is removed because that asset is not there now. So accumulated depreciation on asset sold is 5 crore. 5. So what is your balance here? 194 minus 5, 189. Compare this with your closing accumulated depreciation. Closing accumulated depreciation is given in closing balance sheet 218. 218. The difference between the two is depreciation for the year. Depreciation for the year is the difference between the two. 218 minus 189, 29. So one student, Chetan, got it right. but nobody else could give the answer. So current year depreciation is 29. Entry for depreciation is depreciation account debit to accumulated depreciation account. But if you are preparing accumulated depreciation account, depreciation to accumulated depreciation. Later depreciation is transferred to P&L account. So I will have to first write in plant and equipment by depreciation working note 4 29. By depreciation working note 429, and let us go to the adjustment also. In adjustment write down add depreciation working note 429. Now the student has a query. What is that interesting query? The interesting query is that in the P&L account depreciation is not appearing. How can you add back? Because if you look at this P&L account, nowhere you have depreciation mentioned. However, one has to assume that depreciation is included in operating expense, because this operating expense will include many expenses. So it may have included depreciation also. Otherwise, there is no other place where the depreciation would have been charged. So we will write an assumption later on that depreciation has been included in operating expenses. Okay. So depreciation is there, but it is hidden under the head operating expenses. So I have completed all adjustment. Now please go to plant and equipment account and tell me the balancing figure is to bank. Balancing figure is to bank. Balancing figure is to bank. Sanket is right. Depreciation is included in operating expense. So who will give me to bank figure? To bank figure. How much is the balancing figure? So I am getting 133, and that represents purchase. Balancing figure. 133 purchase you will write in investing activity. Purchase of plant and equipment. 133 in bracket. 133 in bracket. All adjustments are over. All working notes are closed. So now we can close our answer. Dear student, please come to this point number 3. Operating profit before working capital changes. Operating profit before working capital changes. Take the total. You will get 147. And then you tell me the total of cash generated from operation. Total of cash generated from operation. Total of cash generated from operation. Surya is right. Come on. Come on. Cash generated from operation. Nobody wants to reply. Everybody wants me to solve. Okay. So that is 125. And 125 minus 41. 84. First point, cash flow from operating activity, we got 84. Tanya is right. Cash flow from operating activity 84. Cash flow from Investing activity 115. Cash flow from financing activity 47. Net increase in cash and cash equivalent. Net increase in cash and cash equivalent 16. Chaurasia is right. Thanga Lakshmi is right. Very good. Come on. Yes, come on. Come on, everybody. So this answer is over. Check the answer now. Check the answer now. And in case if you have any query, kindly reply. 16 is right. Okay. So write down some notes. I hope you have noted this entry. If you have a doubt, notes 1. Depreciation is included in operating expenses. Depreciation is included in operating expenses. Depreciation is included in operating expenses. Second note, write down as profit after tax in bracket rupees 66 crore is providing before providing dividend declared dividend declared the dividend declared is not adjusted in adjustments is not adjusted in adjustments is not adjusted in adjustments. Okay. Any query now? Do you want me to write any other note? Point number 3, write down figures of sales and cost of goods sold are not relevant because we have used profit figures. We have used profit figures because we have used profit figures. Now, any query after these notes? If you are using net profit, which means you have already considered sales, purchase, expenses. Okay. So, if you write them again, it will be duplication. Question number 16 now. Question number 16. Very, very important question. Question number 16. So, first you mark there. If it is not written, then write down similar question in November 2020 exam, but not this question. Similar question in November 2020 exam. So you will solve this November 2020 exam question as homework today, and I am going to solve a similar question. And one similar question is there in May 2020 RTP also. Similar question in May 2020 RTP also. This also you will do as homework. You find out these questions and solve. Okay. So we will come to one very important question number 16, which has been asked in the exam for something around 16 marks. Can you believe that? The following figures have been extracted from the books of AS Foundation Limited for the year ended 31st March 2014. So remember, our year ending date is 31st March 14. You are required. Who is required? You. You. This is you. Little sad because so much questions he has to perform. So you are required to prepare a cash flow statement. Net profit before taking into account. Now see, before taking into account income tax. So this is PBT given to you before taking into account income tax and income from lawsuits but after taking into account the following items was rupees 20 lakh. So I will start from profit 20 lakh. My starting number will be profit of 20 lakhs. Okay, so 20 lakh net profit before tax. This is my starting number. Depreciation was, it is after taking into account following item. Depreciation add non-cash item. Discount on debenture written off add. Interest on debenture paid add in. Operating activity deduct in. Financing activity. Book value of investment 3 lakh. Sale of investment 3 lakh 20,000. So there is a profit of 20,000 less in operating activity, add in less in operating activity and add in investment activity sale value. Less in operating activity because it is a non-cash item. And the actual sale value will be shown in investment activity, correct? Interest received on investment 60,000 minus in operating activity and add in investment activity because it requires you to show in investment activity compensation received of rupees 90,000 by the company in a suit filed. Now the question above says net profit before taking into account income tax and income tax lawsuit. So this is not included in profit figure. This is not included in profit figure. So in fact, they should have given this as a separate point. So instead of writing here point number 6, this should have been point number B so that there was no confusion. So this is what is to be adjusted in adjustment. This figure 90,000 is written here is net profit before tax and income from lawsuit. Net income from Net income will be shown separately. This income will be shown separately. This is extraordinary item. This is extraordinary item. Will present separately. Now what is the next point? Income tax paid during the year. So this is actual tax paid. Actual. So this you simply write in operating activity, last second item. 15,000, 10% preference share of rupees 100 each were redeemed on 31st March 14, were redeemed on 31st March 14 at a premium of 5%. So what is this amount paid? 15,000 into 100 and plus 5% premium. So total payment made to preference holder on redemption is 15,75,000. Further, the company issued 50,000 equity share of rupees 10 each at a premium of 20% on 2nd April 2013. So company has issued equity share 50,000 into 10 and plus 20% premium. So equity share issued 6 lakh. Equity share issued 6 lakh. Preference share redeemed 15 lakh 75,000. 15 lakh 75,000. Next point, dividend on preference share were paid at the time of redemption. So this also will come in financing activity. So dividend on preference share will be 15,000 into 100 into 10%, that comes to 1,50,000. Dividend paid for the year 2012-13 5 lakh and interim dividend paid was 3 lakh. Total dividend paid 8 lakh. We will write in financing activity. Land was purchased for 2,40,000, for which company issued 20,000 equity share of rupees 10 each at a premium of 20% to the landowner as consideration. This is a new point. So what is new about it? The new about is it is a non-cash transaction. Land was acquired, shares were issued. So land account debit to share capital to securities premium. But where is the cash? There is no cash. If you pass journal entry for this, the entry would be land account debit to share capital to securities premium. Since cash inflow or outflow has not happened, this item will not appear in cash flow statement. That was given to confuse you. And if you got confused, institute cash inflow from operating activity will increase and students cash outflow from investing activity will increase. Okay? If you make mistake, current asset and current liabilities at the beginning and at the end of the year are given below. One more adjustment. These are all current asset, current liabilities item. Working capital changes. Only this cash in hand will appear as cash and cash equivalent at the beginning and at the end. Okay. So this is the question, and this question has one extraordinary item also. What is that extraordinary item on the screen? Compensation received by the company in a lawsuit filed. So this we will present as an extraordinary item. So dear student, please draw the format. Please draw the format. And in this format, there is one more item you will write. Write down name of the company, AS Foundation Limited. Cash flow statement. Cash flow statement for the year ended 31st March 2014. Cash flow statement for the year ended 31st March 2014. Cash flow statement for the year ended 31st March 2014. Then you write down point number A, cash flow from operating activities. Cash flow from operating activities. Under that write 1, net profit before adjustment. Net profit before adjustment. One line blank. Point number 2, adjustments. Point number 2, adjustments. Keep around 8 lines blank. Point number 2, adjustment 8 to 10 lines blank. Point number 3, operating profit before working capital changes. Operating profit before working capital changes. Operating profit before working capital changes. Point number 4, working capital changes. Working capital changes, keep around 7 lines blank minimum. Then point number 5 write down. Point number 5 write down. Cash generated from operations. Cash generated from operations. Cash generated from operations. Cash generated from operations. Point number 6 write down income tax paid. Income tax paid. Point number 6, income tax paid. Point number 7 write net cash flow before extraordinary item. Net cash flow. Point number 7 this time is net cash flow before extraordinary item. Net cash flow before extraordinary item. And then write down below. Write down below. Next line, keep 2 lines blank. 2 lines blank here. Therefore, cash flow from operating activities. Therefore, cash flow from operating activities. And point number B write down. Point number B, cash flow from investing activities. This you keep 5 lines blank here. Cash flow from investing activity. Cash flow from financing activity, keep 8 lines blank here. Cash flow from financing activities. keep 8 lines blank. In the exam, keep more lines blank because you will not be able to do exact guesswork. So better to keep 2 3 lines extra in operating, investing, financing activity. Don't worry about cash flow because you have made prepaid cash flow in the exam. So even if you take extra sheet in the exam, no cash inflow or outflow will take place. Don't worry. That will be a non-cash transaction. Additional pages taken in the exam. Point number D, net increase or decrease in cash and cash equivalent. Point number D. Point number E, cash and cash equivalent at the beginning. Cash and cash equivalent at the beginning. Cash and cash equivalent at the beginning. Last line, write down cash and cash equivalent at the end. Cash and cash equivalent at the end. Now we'll prepare the answer because this question will not require working notes. This question will not require working note. So we can start solving. If working notes are required, we will discuss. So here we are going to start this wonderful question which was asked in similar question was asked in November 2020 and RTP of year 2021, 2020, both RTP as well as exam 2020, eventful year of your life. Question says Question says the following figures have been extracted from the books of AS Foundation Limited for the year ended 31st March 14. You are required to prepare a cash flow statement. A. Net profit before taking into account income tax and income from lawsuits, but after taking into account the following item was 20 lakh. So you will write here net profit before adjustment. First point 1, net profit before adjustment. Net profit before adjustment 20 lakh. Next we have to write in adjustment. In adjustment write down add depreciation. Add depreciation. How much is depreciation? 5 lakhs. Then next item add. Why we are adding it? It's a non-cash item. Non-cash item. Then next is add discount, debenture discount written off. Debenture discount written off in bracket non-cash item. In bracket non-cash item 30,000. Then you add interest on debenture paid. Now why this we are adding? Because this I am going to show it in financing activity 3,50,000. 3,50,000. So please come to financing activity. Point number C, interest on debentures paid. Financing activity, interest on debentures paid 3,50,000. 3,50,000. Next item is book value of investment 3 lakhs sold for 3,20,000. So there is a profit. Okay. So profit you write down less profit on sale of investment. This is a non-cash item. Profit credited to P&L account is a non-cash item, and the amount will be 3,20,000 less 3 lakh, that is 20,000. That is 20,000, and the actual sale value you will write in investing activity. In investing activity, write down sale of investment. Sale of investment, positive number 3,20,000. Next point is interest received on investment, less interest received on investment in adjustment. Then your query is why. The answer is it will be shown in investing activity. The amount is 60,000. Remove from one pocket and put in another pocket, the correct pocket. So now in point number B, cash flow from investing activity, sorry, cash flow from investing activity, write down interest received on investment. Interest received on investment is 60,000. Interest received on investment 60,000, and then this point number 6, which is wrongly written as 6, it should have been B. Compensation received 90,000 by the company in a lawsuit filed. Where will you write it? Below point number 7. Point number 7, you have written net cash flow from net cash flow before extraordinary item, you have written net cash flow before extraordinary item. Below this, I have asked you to keep two lines blank. There you write down compensation received, compensation received in, this is an extraordinary item because it is not a day to day operating items, but we are going to present it because cash flow was received. How much cash flow was received here? 90,000. 90,000, because there is a cash flow, it has to come in the cash flow statement somewhere. Point number next in your question, point number next is income tax paid. Now already written paid here, so we are going to write in main answer point number 6, income tax paid. Income tax paid is 10 lakh 50,000 in the first column. Income tax paid 10 lakh 50,000. Income tax paid 10 lakh 50,000 in bracket. Next is 15,000 10% preference share of rupees 100 each was redeemed on 31st March 2014. So this will come in financing activity. In financing activity, write down redemption of preference shares including premium. Redemption of preference share including premium. So preference share is 15,000 into 100, 15 lakh, and 15 lakhs plus 5% premium. 15 lakh plus 5% premium. 15 lakh plus 5% premium. So total 15 lakh 75,000 we have to pay. Next point. Further, the company issued 50,000 equity share of rupees 10 each at a premium of 20% on 2nd April 2013. Issue of equity share, same place. Issue of equity share 50,000 into 10 and plus premium 20%. So that will come to 6 lakh rupees positive. That will come to 6 lakh rupees positive. Any doubt up to this point? Point number C continues, dividend on preference share were paid at the time of redemption. So dividend on preference shares. Dividend on preference shares paid. Calculation will be 15 lakh multiplied by rate of dividend 10%. So 15 lakh into 10% in bracket 1,50,000. In bracket 1,50,000. Come on. Point number D. Dividend for the year paid 5 lakh, interim dividend paid 3 lakh. So write down dividend paid in bracket total, and that is 5 lakh plus 3 lakhs 8 lakh. You want to write separately 5 lakh and 3 lakh separate line? You can. Otherwise, this is okay. Land was purchased for which company issued shares. This will not come in cash flow statement because there is no inflow or outflow of cash here. Next point F. Current assets and current liabilities at the beginning and at the end were as detailed below. So dear student, time to take out your calculator. First one, increase in stock. Can you see increase in stock? From 12 lakh to 13 lakh 18,000. That is 1 lakh 18,000. Increase in current asset, decrease in cash flow, 1 lakh 18,000. Same point for debtor also. Increase in debtors. Increase in debtor from 2 lakh 8,000 to 2 lakh 13,100. So in bracket 5,100. Next point, cash in hand. This we will write in point number E, cash and cash equivalent at the beginning. 196,300 in the outer column, and cash equivalent at the end. Last line, last column, 35,300. 35,300. Okay. Okay. Back to working capital changes. Bills receivable. What happened? Decrease. So write down decrease in bills receivable. 50,000 minus 40,000, 10,000. Decrease in current asset, increase in cash flow. Then decrease in bills payable also. Decrease in bills payable 45 minus 40, 5,000. Decrease in bills payable, decrease in cash flow, which means decrease in current liability is decrease in cash flow. Then creditor has increased. Increase in creditor 171,300 minus 1,66,000, 5100. Sorry, 5300. 5300. Increase in creditor, increase in cash flow. Increase in creditor, increase in cash flow. And one more, increase in outstanding expense. Increase in outstanding expense. 81,800 minus 75,000. So that will be 6800. Increase in current liability. Increase in cash flow. Increase in current liability. Increase in cash flow. So this is the end of the answer from our point of view. Now what remains is the closing ceremony of this question. So first you tell me the total of these items. Total of point 1 and 2, operating profit before working capital changes. Operating profit before working capital changes. Any student who wants to reply? This is 28 lakh. Very good. 28 lakh is right. Now take the total of these figures. This will give you cash generated from operations before tax paid. Cash generated from operations before tax paid. Any answer for this? Cash generated from operations before tax paid. Please reply fast. Cash generated from operations before tax paid. Anybody who wants to reply? Cash generated from operation 2694,000. 2694,000. Now minus tax paid 10,50,000. So net cash flow before extraordinary item is 16 lakh 44,000. Very good Sanket. 16 lakh 44,000 net cash flow before extraordinary item. Net cash flow. Tanya is also right. And from this 16 lakh 44,000, you deduct compensation received, not deduct, add plus 9 lakh inflow. So my cash flow from operating activity, this is 90,000. 17 lakh 34,000. Cash flow from operating activity 17 lakh 34,000. Chaurasia is right. Investing activity easy without calculator 3 lakh 80,000. Financing activity, financing activity, try financing activity All of you, please tell me total of financing activity so that I am getting in bracket 22 lakh 75,000. Yes. So now we have all the three activities in the outer column. So dear student, please reply what is the net increase or decrease in cash and cash equivalent. So there is a decrease of 161,000. 161,000. Come on, everybody, please reply. Check the final answer. Is it telling? Is it telling? Let me check. Automatically it is telling. Yes, it is right. This answer is right. It is telling. Okay, so please come to next question. Before that, write a note. Note, write down. Note number one, purchase of land. Purchase of land in exchange of equity shares has not been considered in cash flow statement, has not been considered in cash flow statement as it does not involve any cash transaction, as it does not involve any cash transaction. As it does not involve any cash transaction. Note is must. One mark is for note also. Note number two, profit figure in bracket rupees 20 lakhs given in the question, given in the problem is before providing for following items. Is before providing for following items. Under that, write down Roman 1, premium on redemption of preference share. Premium on redemption of preference share. Second is dividend paid on preference shares and equity shares, and dividend paid on equity shares. Because if I add the premium or if I add the dividend, then your cash flow statement will not tally. Then your cash flow statement will not tally. So it appears from the question that the profit figure given to you is charging before charging these two items. So your query is valid. Normally we add premium on redemption to profit, But what I have written, profit figure given in the question is before making provision for following items. So with this assumption, this answer would tally. Okay. So this answer is over. Enjoy. So we have taken many questions under direct method. So from direct method we'll take a break, and now we'll go to indirect, reverse. Many questions under indirect method we have taken. Now we'll solve some questions under direct method. So please come to one question which I am going to dictate. This is one of the recent questions. Please write down question from November 2020 RTP. Oh my God. Institute have recently asked lot of questions on cash flow statement. So we are going to solve one question, but first you have to write it down. Please write, prepare cash flow statement, prepare cash flow statement of Light Limited, prepare cash flow statement of Light Limited for the year ended, for the year ended 31st March 2020. I am dictating the question for the year ended 31st March 2020 in accordance with AS3, in accordance with AS3, bracket revised, from the following summary cash account, from the following summary cash account. Then write down summary cash account, right hand side two columns, figures in rupees in thousand, figures in rupees in thousand, figures in rupees in thousand, balance as on 1st April 2019, balance as on 1st April 2019. In write down 315. In the second column write 315. Then write down receipt from customer, receipt from customer 24894, receipt from customer 24894. Then sale of investment, sale of investment, in bracket write cost, cost in bracket 1,35,000, and in the amount column 153, in the amount column 153, because that is in thousand, that is in thousand. Next line, next line, issue of shares 2700, issue of shares 2700, sale of fixed asset, sale of fixed asset, little fast, 1152, total, This indicate these are inflows. 29214. 29214. Come on, students, fast. Payment to suppliers. Payment to suppliers. 18306. Payment to suppliers 18306. Purchase of investment. Purchase of investment 117. Purchase of investment 117. Purchase of fixed asset 2070. Purchase of fixed asset 2070. Wages and salaries 621. Wages and salary 621. Selling and administration expense. Selling and administration expense 1035. Selling and administration expense 1035. Payment of income tax 2187. Payment of income tax 2187. Payment of dividend 720. Payment of dividend 720. Payment of dividend 720. Repayment of bank loan. Repayment of bank loan 2250. Interest paid on bank loan 450. Balance on 31st March 2020. Balance on 31st March 2020. 1458. This is a November 2020 RTP question. And this question we have to solve the way the question is given. Option A, direct method. Option B, indirect method. Which option is applicable for this query? Question has not mentioned whether direct or indirect, but we have to decide. Now, in this question, we cannot apply indirect method. This is not possible because even profit figure is not available. So, even though the question says only prepare cash flow statement, looking at the data, this kind of problem can be solved only under direct method, because you are given collection from customer, payment to supplier, payment of wages and salary. So you cannot solve it under indirect method. So let us write down direct method answer. So first you write down format. Please write the format. Name of the company, Light Limited. Cash flow statement, in bracket direct method. For the year ended, for the year ended 31st March 2020. Do you remember the year 2020? You were at your home, rupees in thousand. So first you write down the format, serial number, particulars, rupees, rupees, and rupees in thousand. First write down point number A. cash flow from cash flow from operating activities. Cash flow from operating activities. Keep around 7 lines blank. Then write down here cash generated from operations. Cash generated from operation. Then write down less taxes paid. Less taxes paid. Therefore, cash flow from operating activities. So simple. So simple. Cash flow from operating activity. Don't you think it is very simple? Below that, write down point number B. Cash flow from investing activities. Cash flow from investing activities. Cash flow from investing activities. Keep around 6 lines blank. Keep 6 lines blank. Point number C. Cash flow from financing activities. Write full. In the exam, if you write FAIA, institute will deduct marks. I have informed you in advance. Later on, you will be responsible. Point number D. Net increase or decrease in net increase or decrease in cash and cash equivalent. Point E. Cash and cash equivalent at the beginning of the period. And F, write down cash and cash equivalent at the end of the period. So this way you have to first draw the format. In the exam, keep more space. Okay, so that you can write comfortably. Later on, if there is no space, you will have a problem in presentation. Is the format ready? No working note required. Only you have to put the correct item in the correct heading. So we are going to start this wonderful question. From November 2020 RTP. Opening balance 315. Point number E. Opening balance 315 here. Opening balance 315. Receipt from customer operating activity. Right here. Collection from customers. 24894 positive. 24894. Then sale of investment. Sale of investment is an investing activity. Sale of investment in point number B. And we are writing rupees in thousand. Sale of investment is 153 positive. Then we have issue of shares. Issue of share is a financing activity. Point number C. Issue of share of positive cash flow 2700. 2700. And then sale of fixed asset investing activity. Point number B. Sale of fixed assets. Sale of fixed asset. Please write positive number 1152. 1152. Now payments are given. Payment to supplier is operating activity item. So payment to supplier in bracket write 18306. Purchase of investment, investing activity. Point number B. Point number B. Purchase of investment in bracket you will write 117. It is an outflow. Then purchase of fixed asset, again investing activity. In investing activity continue, purchase of fixed assets in bracket 2070. Then wages and salary, operating activity, wages and salary 621 outflow. Selling and administration expense, operating activity, selling and administration expense 620, that is 1035 in bracket. These are payments. Very good. Come on. Payment of income tax. Here in operating activity less tax paid, income tax paid 2187. 2187. Payment of dividend. Financing activity. Dividend paid. Financing activity 720. Repayment of bank loan. Financing activity. Repayment of bank loan quickly. Financing activity 2250. Interest paid on bank loan. Interest paid on bank loan is a financing activity. All figures are ready made available. Outflow 450. And the last line, balance on 31st March 2020. This is your closing balance 1458. Check up to this you have done. First you transfer all the figures in respective places. So 1458. Now we'll start taking total. Cash generated from operation. Total of these four items will give you cash generated from operation. Check the total 4932. 4932 minus 2187. So cash flow from operating activity is 2745. 2745 is right. Surya is right. And then from investing activity, take the total investing activity is minus 882, negative 882. Take financing activity total in the outer column. Financing activity total is negative 720. Negative 720. and therefore net increase, word tick mark, in cash and cash equivalent, you take the total of A plus B plus C, 1143. Tanga Lakshmi is right. Tanya is right. And only cross check whether this two total is equal to 1458, is equal to 1458, is equal to 1458. So this is telling, this is a simple example of direct method. In the exam, they may not ask such easy question. This was the problem for the starter, beginner. First question should be easy to increase your confidence. Okay, now we'll come to 1 November 2021 RTP. Oh, that was made November 2020. This is November 2021 RTP. So please write down one more question. Please write down one more question. November 2021 RTP question. Please write, on the basis of the following information, on the basis of the following information, you will write the source November 2021 RTP. On the basis of the following information, prepare a cash flow statement. Prepare a cash flow statement for the year ended. Prepare a cash flow statement for the year ended 31st March 2021. For the year ended 31st March 2021. In bracket, they have specifically given, underline, when specifically given, follow the instruction. Using direct method. Oh my God. Using direct method. Underline direct method. Write down few points. Write down few points. Total sales for the year. Total sales for the year were 597 crore. Total sales for the year were rupees 597 crore, out of which cash sales amounted to rupees, out of which cash sales amounted to rupees 393 crores. Cash sales amounted to rupees 393 crores. Next line, receipt from credit customers. Receipts from credit customers during the year. Quickly write down, receipt from credit customers during the year total rupees 201 crore. Total rupees 201 crore. 3, write down purchase for the year. Purchase for the year. Purchase for the year amounted to rupees 330 crore. Amounted to rupees 330 crore. Out of which credit purchases were, out of which credit purchases were 80%. out of which credit purchases were 80%. Next line, balance in creditor as on, balance in creditor as on, balance in creditor as on, underline or next line 1 for 2020 is 126 crore, 31st March 2021, 31st March 2021 is rupees 138 crore, 31st March 2021 is 138 crore. Point 4, suppliers of other consumables, suppliers of other consumables, suppliers of other consumables and services, suppliers of other consumables and services were paid, suppliers of other consumables and services were paid rupees 28.5 crore in cash, rupees 28.5 crores in cash. Next line, employees of the enterprise were paid, employees of the enterprise were paid rupees 30 crore in cash, employees of the enterprise were paid rupees 30 crore in cash. Point 6, fully paid preference shares, fully paid preference shares of the face value of rupees 48 crores, of the face value of rupees 48 crores were redeemed, were redeemed. Equity share of the face value, equity share of the face value of rupees 30 crores, of rupees 30 crores were allotted as, were allotted as fully paid up, were allotted as fully paid up at a premium of 20%, were allotted as fully paid up at a premium of 20%, at a premium of 20%. Point number 7, debentures of rupees 30 crore, debenture of rupees 30 crore at a premium of 10% were redeemed, at a premium of 10% were redeemed. At a premium of 10% were redeemed. Debenture holders of 30 crore at a premium of 10% were redeemed. Double underline. Debenture holders were issued equity shares. Debenture holders were issued equity shares in lieu of their debentures. That means instead of paying cash, they were issued equity share of 33 crore. So if they are issued equity share in place of debenture, it is a non-cash item. It is a non-cash item. Point number 8, rupees 39 crores were paid by way of tax. Rupees 39 crores were paid by way of income tax. Rupees 39 crores were paid by way of income tax. Point 9, a new machinery, a new machinery costing rupees 15 crores, it should be 15 crores, A new machinery costing rupees 15 crores was purchased. Was purchased. Point number 10. Investment costing rupees 27 crores were sold were sold at a loss of rupees 3 crore. Were sold at a loss of rupees 3 crore. Point 11. Dividend totaling rupees 22.5 crores. Dividend totaling rupees 22.5 crores was also paid. Was also paid. 11. 12. Debenture interest. Debenture interest amounting rupees 3 crore. Debenture interest amounting rupees 3 crore was paid. Debenture interest amounting rupees 3 crore was paid. 13. On 31st March 2020, balance with bank and cash in hand. This is opening balance. Balance with bank and cash in hand total rupees 3 crore. Total rupees 3 crore. That is a very easy question. Similar questions have been asked in the exam also. So first what we'll do, first we'll draw the format. So please write down, name of the company is not given. So directly write cash flow statement. This is direct method because in the problem it is mentioned direct method. For the year ended 31st March 2021. Serial number, particulars, rupees, rupees, rupees in crores, rupees in crores. Then write down point number A, cash flow from operating activities. Write fully, cash flow from operating activities. Keep about 8 lines blank here. Then write down cash generated from operations. Cash generated from operations. And we'll have to take a total here. Less taxes paid. Less taxes paid. And therefore, cash flow from cash flow from operating activities. Therefore, cash flow from operating activities. This is my point number A, cash flow from operating activity. Write down along with me. Next point, number B, cash flow from investing activities. Cash flow from investing activities. Keep 5 or 6 lines blank. Point number C, cash flow from financing activities. Keep about 7 lines blank. Point number D, net increase or decrease in cash and cash equivalent. In cash and cash equivalent. Point number E, cash and cash equivalent at the beginning. Point number F, cash and cash equivalent at the end. Cash and cash equivalent at the end. Check whether you have completed the format. Now you must have remembered the format by now. You have become champions of cash flow statement. Okay. So once your format is ready, please tell me. I will solve. It should not take more than 5 minutes now. So let us start with this wonderful question. Total sales for the year were 597 crore, out of which cash sale amounted to 393 crore. So in operating activity, you write down cash sales because this is cash inflow. Positive number 393. Question should be in front of you. Next line, receipt from credit customer total 201 crore. So I will write collection from debtors. I will write collection from debtors. 201 crore inflow. 201 crore inflow. Now it says purchase for the year amounted to 330 crore, out of which credit purchase was 80%. So here you write down cash purchase. Cash purchase will be 330 crore into 20% because 80% is credit. So 330 into 20%, 66 crore. 66 crore cash purchase in bracket. Then credit purchase will be 330 and into 80% is credit purchase. Is it right? Balance of the creditor was 1/4/2020 126 crore and closing 138 crore. So write payment to creditor. Payment to creditors will prepare a small working note 1. Will prepare a working note 1. So come to working note 1. Working note 1. Payment to creditors. Right hand side rupees in crore. First point A, opening balance, or you can prepare a ledger also if you want. Opening balance is 126. Point B, add credit purchase. Add credit purchase is 80% of 330, 264. And point C, less closing balance 138 crore. So point D, therefore payment is 252 crore. Therefore payment 252 crore. Therefore, payment 252 crore. So now I will come to operating activity and write 252 crore here. Working note 1. Payment to creditor 252 crore, working note 1. Point number 4. Suppliers of other consumable and services were paid 28.5 crore in cash. Just copy the same line. Payment to suppliers of consumable. Payment to supplier of consumable and services. Same line copy. Payment to supplier of other consumable and service in bracket 28.5 crore. Point 5. Employees of enterprise. Payment to employees. Payment to employees. Employees were paid 30 crore. 30. Next. Fully paid preference share of face value of 48 crore were redeemed. Fully paid preference share redeem will come in financing activities. So you will write redemption of preference shares. Redemption of preference share 48. Equity share of the face value of 30 crore were allotted as fully paid up at a premium of 20%. So now I will write issue of equity shares including premium 30 plus 20%, 36. 30 plus 20%, 36. Point number 7 will not come in cash flow statement. We will write a note for point number 7. Point number 7 says debenture of rupees 30 crore at a premium of 10% were redeemed. Debenture holders were issued equity share in lieu of their debenture. So note, write down conversion of debentures into equity shares will not be included in cash flow statement. Conversion of debenture into equity share will not be included in cash flow statement as there is no cash transaction involved. As there is no cash transaction involved. As there is no cash transaction involved. Next point, 39 crore was paid by way of income tax. Come to operating activity. Here it is written tax paid 39 crore. A new machinery costing rupees 15 crore was purchased. This is investment activity. This is investment activity. So you will write purchase of machinery 15 outflow. Investment costing rupees 27 crores were sold at a loss of 3 crore. Sale of investment. Cost is 27 minus 3 crore loss. So net amount realized 24. Net amount realized 24. Then next point is dividend 22.5 crore was paid. Financing activity, dividend paid, 22.5. Debenture interest 3 crore paid. Same place, financing activity. Now you'll find this chapter is becoming easier and easier. Your friends will tell you this is very difficult, but it is not. We'll do more practice tomorrow, day after tomorrow. In next 2 days, we'll take many questions and your confidence will be built up. On 31st March 2020, cash and bank balance was 3 crore. So that is cash balance at the beginning. That is cash balance at the beginning, 3 crore. Now we'll come to operating activity. Take the total of these items first. Take the total of these 6 items first. That will give you cash generated from operation. Cash generated from operation. Cash generated from operation. Please reply. Cash generated from operation is 217.50 minus tax paid 39. So outer column cash flow from operating activity is 178.50. 178.50. Thanga Lakshmi is right. Thanga Lakshmi Surya is right, 178.50. And then you take investment activity total. This is positive 9 without calculator. Financing activity negative 37.5. Negative 37.5. Check the answer, negative 37.5. And then net increase or decrease in cash and cash equivalent. Net increase or decrease in cash and cash equivalent is 150. 150. And therefore closing cash and cash equivalent is 153. Closing cash and cash equivalent is 153. Closing cash and cash equivalent 153. And now in this question, there is a problem. We don't have any mechanism to cross check whether our answer is right or not, because closing cash balance was not supplied to us. So a student has to do it very carefully, because you'll not be able to cross check whether your answer is right or not. So this answer is over. If you have any query, please ask right now. Otherwise, today's lecture is over. Any query on this? Any query on this question? Anyone? No query? So we'll continue tomorrow. Thank you very much. Bye bye. Have a good day. Enjoy your studies. Revise all questions and also practice 10 extra questions today. Then go to sleep. Don't take food also unless you complete the homework. Okay. So thank you. Bye bye.